Hello, everybody. Welcome to the Fundamental Analysis webinar with AvaTrade. My name is Troy. I'll be presenting. I'm a senior account manager with the company. As we get going, a couple things to keep in mind. Well, first, let's do a quick systems check, actually. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. As I started to say, a couple things to keep in mind as we go through the webinar. One is that obviously no one trade is guaranteed to profit. So there's risk with each and every trade that you take. And so you should, in one way or another, manage risk in a way that makes sense for you. You might be using stop loss marks or hedge positions. And we actually have a unique tool called AvaProtect that's available on our award-winning mobile app, AvaTrade Go. It's also available on our WebTrader platform, along with a number of other risk management tools that really can make your risk management a bit easier. As we move forward, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, what is fundamental analysis? Hello, Natalie. Good to see you. What is fundamental analysis? It is basically the news. It's what's happening around the world and how it may influence the instruments that you're trading on is our focus. It's really why we're looking at the fundamental news, is to understand maybe we have a preference as to which way to trade before you get into your technical analysis on the chart. And so there are different types of fundamental analysis or different types of fundamental news that we can look at. Some we may refer to as regular economic events, such as some of the data that came out today on the economic calendar. We'll take a look at that and see that there were actually some mixed numbers that came out, but in general on the positive side. And then also there are other types of headlines, extraordinary economic events, like happened with Amazon today, retracting a story that broke yesterday regarding their plans for cryptocurrencies. And so we saw the crypto market go flying up with the anticipation of Amazon taking on more of a role with cryptocurrencies, which obviously Amazon being one of the largest online retailers in the world would be quite good news for those holding positions in the buy position with cryptocurrencies. And then out came news today that they're saying that they didn't say anything about any immediate plans, and down went the crypto market. So actually very good for traders if you were set up properly. We'll take a look at some ways that you could have taken advantage of it. And so that's an example of extraordinary news, meaning you just don't know when that type of news might come, when a headline might hit that will move the market, and you don't know what the headline will be about. Whether in the past it was about Brexit or COVID, you just can't predict those types of headlines because they're not scheduled, like the economic calendar, which is a more regular type of economic event. But in combination, those types of fundamental bits of information definitely move the market. And you can plan for both the regular economic events and the extraordinary economic events, both with a combination of market moves and pending orders at strategic locations. So as we move forward, please let me know if you have any questions. If you have any input, feel free to use the chat box to do so. Now, some headlines that I've seen today that seem important. Crude oil edges higher, mixed COVID news. Okay, so the fact that there's some mixed news about COVID, meaning there was a lot of fear hitting about the virus getting worse and the Delta variant. There's actually been some encouraging news that areas in Europe and other places, the UK, the infection rate has plateaued or even started to decrease, even with the new variant. And so that actually created some optimism, but still there's some volatility on the markets because there's some uncertainty about other areas where the virus is spreading more. But that helped crude oil go up a bit in combination with the fact that there's been, in general, some positive economic news. And so that helps drive crude oil prices up. Now, as you get too good of economic news, which is driving oil prices up, right? That type of inflation actually can create some scare on the markets. And so there's some worry that the inflation could kind of pour cold water on the Bank of Canada's hot economy strategy. So, you know, the Bank of Canada, just like banking systems around the world, have held very low interest rates, giving easy loans, etc. And so that type of support for the economy has helped the economy, but also is leading to higher than maybe ideal inflation in some areas around the world. So we have to keep an eye on the inflation, and that's really driven some fear today in the markets. Now, we take a look at some of the announcements that came in today. It's a mix, certainly. We see out of the US some numbers. These all came in the red here out of the US, which you'd say, okay, well, that's not good. Red means worse than expected. But they do show an increase still in durable goods orders. So the increase has slowed, did not rise as much as expected, but we did see still an increase in durable goods orders, albeit not at the level that was expected. And then later in the day, we see out of the US consumer confidence at quite a high. The consumer confidence is higher than expected, and so that bodes well for the economy when consumers feel confident about buying things. Okay, so that kind of eased some of the fear today, but the fear is still there, as you can see. If we come up here, futures have been in the red all day. The market opened in the red, and the volatility index has been up significantly today. Double digits pretty much all day long on the volatility index. So high volatility today, a bit of a pullback in the market, but certainly not a crash. Okay, not a crash, because as we saw in some of those headlines, it's not all bad news. Some of the COVID fears kind of improved a little bit with some plateauing with cases in different areas. And so kind of a mixed bag on the fundamental news and kind of volatility leading the way so far today. All right. But there has been some positive news out of the US with consumer confidence. And we've got some CPI numbers coming later today, tonight, morning time in Australia. CPI numbers coming, which really are very important when there's fear about potential inflation. These consumer pricing index numbers that come out for various countries around the world are really looked at closely. So there's a potential for very large movement at 9:30 p.m. New York time. That's what I have it set on here. Look at your GMT offset, and when this announcement comes in later, you very well may see some huge movements on the Australian, let's say Australian JPY or Australian USD, as these CPI numbers come in. Okay, so we can take a look on the AvaTrade website, and I mentioned the AvaTrade Go mobile app, which has the AvaProtect feature and some other nice risk management features. If you go to our trading platforms tab, go to AvaTrade Go with your mobile device, obviously. You can download the mobile device from the major app stores, and the mobile app has AvaProtect, which for small premium costs can protect against any losses for defined time periods, and the profits are yours. So it's a unique way to manage risk, only available at AvaTrade. And you also have the take profit and stop loss features. When you program those with prices, it gives you the amount that you're risking and what your potential profit is. It calculates it for you. So you understand your risk, your potential profit. You have unique ways to protect against losses, all within the order window before you buy or sell. So very cool feature. And you'll also find that if you log in from our main website, you'll find all of those features in our WebTrader platform, which also trades, just like the AvaGo mobile app, trades on top of your MT4 and MT5 accounts. So when you place trades here, it's on your MT4 account or it's on your MT5 account. It's just a more user-friendly interface with features that many people like. So I would check out this platform. It has a lot to offer. Now, let's real quick jump on the MT4 platform, which I know most of you are quite familiar with. And if you're not, talk to your account managers. You can get some help with both our WebTrader platform as well as the MT4 and MT5 platforms. Okay, so what are we looking at here? This is Bitcoin. And it was interesting last week, we were taking a look at Bitcoin when it was down around 30,000, okay? And okay, great, Benjamin. I'm glad. Yeah, the WebTrader works both on your desktop and also on mobile devices. So the WebTrader platform kind of makes it so you don't have to use AvaTrade Go, because your mobile devices, if you log in from our website to the WebTrader, can work just fine on the WebTrader. Okay, so last week we were looking at Bitcoin and we saw this downtrend, these lines we drew last week, and we drew this support level right here around 30,000. Okay, we said if it breaks below the support level here, these wicks, then sell, which we did. We had pending orders set up and it would have sold and then came up and lost and hit the stop loss back above 30. But we also said if it breaks back above 30, have your buy stop pending order ready to buy, because we saw that 30,000 was an important price level. And sure enough, that's what happened. The market sell that we set up to sell as it was dropping below 30,000, or pending orders, if you set it up as a pending order, those came back up and hit the stop loss. But then that triggered the buy stop above the 30,000 level, and up it went. And certainly, if you were taking profit anytime within the next 5,000 or even 10,000 points on the chart, you made a very nice profit, even with the small loss on the sell position that was activated as Bitcoin dropped below that important price level of 30,000. And that's an example of not having to win a high percentage, meaning we won 50% in that case, but still making a very nice profit. Okay, so we're looking at finding with your technical analysis an important price level. The price broke below, triggered a sell stop. That came back up and lost. That triggered a buy stop above 30,000, and away it went. Okay, now why did Bitcoin and the other cryptocurrencies rise so much? Couple reasons. The fears about China and their banning of the crypto industry gradually has waned, because other areas around the world are not so intent necessarily on banning the industry. And then also there was news from Elon Musk with Tesla saying that once again they believe that they likely will accept Bitcoin payments, and that they're rethinking their concerns about the energy usage of Bitcoin, and you know, in general, that they're still a strong supporter of the crypto industry. And with that news, up went the cryptocurrencies. And then also Amazon coming out, the Amazon news coming out yesterday and the day before, that they would be getting involved with the crypto industry and payments and processing and such. And those two factors drove cryptocurrencies as a whole, Bitcoin leading the way up quite a bit, which we see on the screen. Okay, and in that case, we didn't know what the fundamental news would be. That's an example of the extraordinary fundamental news. We didn't know those headlines would come, but certainly we knew that 30,000 was an important price level, and so we had a pending order buy stop up here, so that if some kind of unexpected fundamental news hit and it broke above 30,000, boom, we got in and up it went. Okay, So that's the situation. Now the uptrend ran out of energy at about 40,000. Okay, so here's the new resistance up here around 40,000, up here, and here's the support down around 30,000. And now after Amazon's headline, after the headline about Amazon kind of saying, hey, rebutting the news that, hey, we don't have any immediate plans for jumping into any major crypto processing or crypto involvement, that kind of helped push the cryptocurrencies down now. So if we zoom in, say 15-minute candles, we can see here's the big drop off, and here it found some support on the 15-minute candles. And so, fundamentally speaking, there's probably reason why this could push down a bit further. And so if you're looking at potential opportunities, you could look to potentially take some moves on Bitcoin or some of the other cryptocurrencies with a resistance level not far away and a support level, major support level, a lot further away in the opposite direction, in this case, the downward direction. And maybe I get rid of some of these old lines. Okay, and so we could even look at 1-day candles. And on the 1-day candles, you see the resistance up here really closer to 41,000. Okay, resistance, resistance. It touched it, that area. See this wick? Touched that resistance and whoosh, down. Okay, I suspect we may see this try to test that resistance again before it makes up its mind whether to break through or have a true reversal back down. Okay. What kind of pending order, by the way, if you wanted to just put a pending order up here around 41,000 or just below, what kind of pending order would sell from up here? If you're anticipating a retest of this resistance before a larger reversal, what kind of pending order would sell from up here? Sell limit or sell stop? Yeah, exactly. That would be a sell limit, selling from a higher point. So something that could make sense fundamentally here. Yeah, a buy stop would be if you wanted to buy from a higher point. So if you say, okay, here's the resistance, if the price breaks the resistance and hits up here, say at 42,000, you could have a buy stop pending order ready to go. Okay, a buy stop pending order would make sense if it breaks the resistance and comes up. Buy stop pending order, and a sell limit pending order would be if this comes up to the resistance and you sell. Okay, selling from a higher point. So let's say it approaches 40,000 again, or 41,000, we really see the major resistance level at. You could say pending order. If Bitcoin reaches sell limit, if Bitcoin reaches, say, 40,800, you sell with your stop loss at, let's go 1,000 up, 41,800, and you take profit back down, let's say 35,000. Halfway to the support level down here at 30. So if it touches this area again up here near 41,000, it sells with the sell limit. You take profit if it goes halfway down towards the 30,000 support level. That's just an example. You could take profit at a different spot. You could enter at a different spot. But here's the pending order, sell limit. Okay, so again, if I get rid of these lines I drew, then we can see the pending order lines. Okay, so entry price is just above today's high, right here. Okay, this green line, which is just before the resistance level on the 1-day candles right here. Okay, and not today's high, yesterday's high, I should say. If it just gets near yesterday's high up here, it'll sell. And so the sell limit would sell if it gets near the resistance. And your take profit then is somewhere down here before the 30,000 support level. If you believe it would be a huge correction all the way back down to the support, then your take profit you would drag down a bit further. Okay, so that's a setup. Fundamentally, we understand why cryptocurrencies went up to 40,000. We understand why they pulled back. And so you have to decide, there's kind of mixed news right now, fundamentally speaking. So maybe you look more strategically at the technical analysis and say, you know what, it was good enough news to hit 40,000 yesterday. Maybe it retests that price level before it makes a decision either to plunge or to break through. And so you have a sell limit to take a shot maybe from this resistance up here, if that makes sense to you. Okay. All right, we can take a look at crude oil, and we see, let's go to the 1 hour candles. We see resistance level up here in the 1 hour candles and a support level down in this area here and a support level here, right? So currently it's sitting on the first support level. Okay, resistance becomes support, support, and testing that support level. With the volatility index as high as it is today and fear kind of driving the day, it looks like oil may try and break this support level right here. Okay, and it already did once. You see this wick came down. Okay, the next support level is down here around 70.5. So about 80 cents down per barrel. So if we go in, we look at 5-minute candles, then all of a sudden, yeah, you see the downtrend more clearly, quite a downtrend. If we go to 30-minute candles, we see the bounce clearly, strong downtrend and a bounce. But it bounced after breaking the support level, and we still have high fear on the markets today. So, you could take a shot here at shorting something like crude oil. You don't have to risk much. You put your stop loss above the broken support right there. Okay, we see this was a support, broken support, and then a bounce. And then you take profit. You're assuming then, if you take this move, right, you're assuming that it would break the first support and head towards the second one down here. And so your take profit might be before the second support level. Fundamentally, why would oil drop? We know that last week there was some agreement with the OPEC plus nations, OPEC and OPEC plus nations, to increase production. Okay, so that's bearish, more long-term bearish news on crude oil if production is going to be increased. Then you throw in mixed fear about COVID, some good news about it, some bad news about it. There's probably enough there to help drive crude oil down a bit more. If not, you're not risking so much to get your stop loss above this little support level, and your take profit gives you 2 to 3 times the potential profit compared to risk. Okay, so that's a nice little scalp type move on crude oil, going with the current fundamental news from last week into this week about crude oil and increased production potentially coming. Now, if we look at, let's say, the US Tech 100, boy, Alibaba didn't have good news today. And so down went the US Tech 100, right? China's really pushing a crackdown on tech companies. And, with the fear that's hitting anyways around the world, we see what happened to the US Tech 100. Okay, those are 30-minute candles. That is quite a rapid drop. Now, the question is, where could this slow down? We go to 1-day candles. We say, okay, I don't see a support level yet. Already broke this support level. And on the 1-day candles, I see support maybe down here. Okay, around 14,460, 14,500. That's a rapid drop. If we then go to smaller candles, say 5-minute, it's still a downtrend. So Is this an opportunistic spot to get in on shorting the US Tech 100? No, honestly, it is not an opportunistic spot. Obviously there could be a temporary pullback at any time. So what might be more opportunistic is to see, okay, this is a sell-off on the NASDAQ. If you get lucky enough to catch a pullback coming back up, perhaps some pending orders up at the next resistance level, say here. Okay, this was a support right here. This was an old support level that broke here. So if this pulls back up to that support level, you could think about having a sell position programmed. Okay, and if that loses, you could have another pending order at the next resistance level, which would be about here. Okay, we see resistance here, which became support in the past. So that should act as the next price level where you could potentially have resistance. You could sell, X amount from here. If that loses and it hits the next one, you could sell from the next important price level, assuming you believe that this fear will continue. Okay. And for that matter, if you wanted to just sell right now, you certainly could. I don't like to sell from such a low point. It would have been nice to have a pending order up here. Remember what we talked about, preparing for unexpected fundamental news with pending orders. Okay, so imagine if 4 hours ago, if you go back 1, 2, 3, 4 hours ago, you saw that there was a support level here and you drew that price level and you said, okay, I know fundamentally news can hit at any time that could move the market sharply. And even before the market started to move, you could have said, okay, here's a support level. Let me put a pending sell stop below that support level so that if that support level breaks with some kind of headline that I don't know what it might be, but if some major news comes out and that support level breaks, my sell stop will get in on a sell. And sure enough, the news came. Fear was very high. It broke the support level. And had you had a sell stop pending order somewhere down here below that support level, boom, you're in a huge profit. Okay? So it's that simple to anticipate the potential for large unexpected fundamental news just by putting tripwires in the market, pending orders that if an important price level like this support level breaks, then you assume that, hey, it makes sense to sell because there must have been big news to break that support level. And down went the market. Okay. Now, could you try and play timing on this and say, okay, I'm going to buy? Why would I buy in such a large downtrend? Well, I do see that there's a support level. Let me just steal this line. There's a support level here. Okay, this was an old resistance, resistance, resistance. Once it broke above, that should act as support. And it hasn't tested that price level again until now. Okay, so it's right on top of this support level. So this is not a fundamental trade. This is a technical trade. This is me saying, okay, you take a shot at a bounce from this support level, put your stop loss just below. Let me get rid of these lines I drew so we can once again see the trade lines. Okay, so if I want a stop loss just below that support level, I don't have to risk much, and I take profit at the first resistance level, expecting a pullback even in a downtrend. Okay, so that's an equal risk to reward setup, buying at an opportunistic spot just above a support level. Okay, and so we see it's trying to bounce. We're up $55 already, right? So this is what we call scalping. Finding an opportunistic spot, knowing that typically, even in strong downtrends, there can be bounce backs, and seeing, okay, here's the support level, and it was just on top, and here's our bounce. Maybe I say, okay, let me take my $85 profit. Okay, that's simple. And that's technical trading. You can do technical trading like this at the same time that you're setting up in the opposite direction, longer term, for fundamental moves. Herman, okay, so this this price level right here that this just bounced from is 14,786. Okay, you really don't have to know the number as much as see visually the price level. Resistance, resistance, resistance. Once it breaks above, that should act as support, at least temporarily anyways. So we temporarily got to bounce off that support level and scalp the profit. And so the exact number is not so important right now as much as the concept. Okay. Yeah, sure. Let's take a look at gold. And you say, okay, if there's fear on the market, then why did gold drop? Shouldn't gold go up with fear? It's a safe haven instrument. Don't people buy gold when there's fear? You know, the volatility index was way up. The indices, the stocks were selling off. Why did gold drop with all that fear? And the answer is gold is only a safe haven typically from inflation fears. The fears today were not about inflation. The fears today were about China cracking down on the tech industry. They were about maybe some of the numbers weren't as good as expected, etc. So there were some economic fears, not necessarily inflation fears. And so the US dollar tends to strengthen a bit and gold tends to pull back a bit if the fears are not about inflation, but if the fears are about economies having trouble. Okay, so that's the difference, and that's why we saw a drop off in gold. Now, with that said, there certainly are still inflationary fears out there. And so if you're a believer that all the stimulus that's been handed out, the interest rates at near zero, central banks still saying they're not going to cut back yet on the stimulus programs, then you might say, okay, this is an opportunistic dip to buy on gold. Okay, it's that simple. Fundamentally, if you believe inflation is going to be more and more of a problem moving forward still, because there's still a lot of stimulus measures with ultra low interest rates out there, and you know, the US is working on another $1 trillion or so stimulus package. If you think that'll drive inflationary fears, then you would be buying on gold after this dip. You would see this as an opportunistic drop in an otherwise bullish market for gold. And if that's how you feel, then buying here and dropping my stop loss just below, say, 1790 is that support level here, then that might make sense for someone who's bullish on gold. And those inflationary fears that are there, if you feel they'll get worse before they get better, you might take advantage of a dip in gold as it came down from 1830 last week to just below 1800. So you see these wicks here on gold. So you could be saying, get my stop loss, and these are 4-hour candles, by the way, if you're not seeing that. You could see putting your stop loss just below these wicks, below the support level, which if you're below 1790, you're below that support level, okay? And so I'm only risking about $10 per ounce. And if I believe gold could reach even last week's high, so we get up here around 1830. So I've got better than 2 to 1, almost 3 to 1 potential profit to risk ratio here. So for some, fundamentally, that's an easy move for gold to believe, you know, the inflation fears aren't gone yet, maybe. And we just saw an article about Canada, right? That the fear is the inflation could cause problems for the Bank of Canada's recovery plans. So certainly the headlines are showing there's still inflationary fears out there. And so this drop off in gold, you could view as an opportunity to go long on gold if you think those inflationary fears will drive gold back up. And with that said, you still could put a sell stop down here below 1890, or I mean below 1790, just in case you're wrong and it breaks the support and maybe plunges, right? So I could set this up with the opposite move. Sell stop, pending order to sell if the price hits, say, 1788. And then my Stop loss could be back up if it goes back above 1800, let's say 1805. So I'm risking what, $17 per ounce, and my take profit then could be down around 17.55. So going after about $33 per ounce profit, risking $17 per ounce, it's about a 2-to-1 ratio. All right, and if we go to one-day candles, you'll see why. If this support level right here, you see these wicks, if that support level breaks on gold and it hits our sell stop price down here at 1788, the next support level on the one-day candles is way down here around 1750. Okay, here's the support, and up it went. These are one-day candles. So if gold comes down and breaks below 1790, there's no support until around 1750 or so. And so that's the idea of that sell stop pending order backing up the market buy on gold. Okay. Allah, thank you. I'm happy to hear that you're enjoying the webinar. So you see, this is about perspective too. When we were looking at 4-hour candles, it looked like for sure buy makes sense, right? 4-hour candles, support level with the right here, it's bouncing off the support. Fundamentals say there's fear on the markets of inflation, so why not buy on gold? Tremendous. And that makes sense. And so the simulation here on the demo account is buy on gold. And you certainly can do that on your live accounts if it makes sense to you. But we always have to understand that other kind of fundamental news. Remember, the kind that a headline could come any moment that takes away inflation fears. What if the U.S. announced just now or tomorrow that they're going to cut back on the bond buying program? If they did that, inflation fears would go way down, and you'd see gold probably drop, break the support level, and plunge to 1750 without any problem. So remember when we started the webinar, I said 2 kinds of fundamental news. The kind that you know, the planned kind with announcements, and the kind that can happen unexpectedly. And I said you can plan for both types of fundamental news. So the first type is we're trading with the fundamental news that we understand, inflation fears. The second type is the unexpected type of fundamental news. We've got a sell stop pending order below this support level in case the news reverses and that support level breaks, then we're in on the downtrend, taking profit maybe just before the next support level down here around 1750. Okay. All right, great. So gold sets up very nicely for a nice technical move, fundamental move, buying from above that nice support level, and also being prepared in case like Bitcoin broke above 30 and went running up. We could see gold break below 1790 and go running down. Okay. Let's then take a look at silver, since someone mentioned it. Herman, you're asking about scalping on silver. Silver works the same way as gold typically, right? And we see the bounce. Look at the bounce going up on silver. Okay, so the same as happened with gold, we see happening. We see this bounce up on silver as well. So we went long on gold. If you're going long on silver, it makes sense. It's a precious metal. It's somewhat of a safe haven. If you think in the bigger picture, you're going to see as we go to the 1-day or 1-week candles, if you think you're going to see silver go running back up, by all means, you can go with inflation fears and silver going back up. I tend to look at gold more for inflation fears because it's more of the #1 safe haven for inflation fears rather than silver. But silver can be very, very similar, and we see the bounce going up. I just don't see as nice of a support level there for silver as we did on gold as well. Honestly, silver looks like if it bounces back up to this area here, it could be a nice spot, technically speaking, to short it, to have a sell limit up here, just below this support level, support level, support level. By the way, a sell stop pending order from just below this support level would have paid nicely. Sell stop, support, support, support. Boom, it breaks, it triggers your sell stop, and down it went. Okay, if this comes back up to that old support level, that certainly could act as resistance. So you could have a sell limit pending order up here, just near 25 to sell if it gets near this resistance level, the old support level. That's purely technical trading if you're into that. Okay. Okay, everybody, I think this is a good spot to stop. We've covered a variety of instruments we've gone through. Oh, you know what? Someone asked about another indice, the DAX. Let's look at the DAX 30. And then I think that'll be a good spot to stop. We've done some commodities. We've done some equities, the indices, some cryptocurrencies. We didn't get into the currency pairings, but I would say take a look at some opportunities to set up some pending orders maybe on the Australian JPY, Australian USD, because you've got those major announcements coming later tonight or in the morning, depending where you're living. That really, I think, will move the Australian dollar with some nice, easy moves to make some potential profits. Okay, so let's look at the DAX. And we see, same as the NASDAQ, same as some of the other indices, a sell-off. Okay, the question is, how long-lived will this sell-off be? Don't forget, there still are a lot of stimulus measures out there for the economies. And I think those stimulus measures are not going to be taken away anytime soon. So, you know, we see an old resistance level here, resistance, 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 which became support, support, and it bounced off that support not that long ago. So you easily could buy on the DAX, understanding there's a lot of support out there for the economy. That's the fundamental part of it. Technically speaking, we're right above a support level that's been confirmed once, twice, 3 times, 4 times, and now it's near that support level again. So technically speaking, I can put my stop loss right down here. If it breaks the support, I'm out. I don't have to risk much. Take profit, I could either say, okay, I'll take it at the first resistance level because there is a lot of fear on the markets right now, or a more longer term approach to say, I think it can come back up to last week's high right up here. And so then I'm going for like a 2 or 3 times potential profit compared to risk. And it's all about how patient are you to take profit. I think with the fear that hit the markets today, it might make more sense to go after a profit sooner. Maybe at the first major resistance level right up here. We see resistance here and down. And so maybe it comes up, challenges the first resistance level before potentially dropping further. Okay, we are working against the current fundamental news, which was a lot of fear and a sell-off on the equities, on the major indices. So if you're buying here, you know it's more of a technical move and less of a fundamental news move in the short term. Okay, I view this like the NASDAQ move that we did, that we simulated, 20 minutes ago or whatever, 30 minutes ago, where we got a nice little bounce off of the support level, even though we were trading against the fundamental news. So I think you have to be careful here with a buy position in the short term. If it's a longer term move and you're putting your stop loss down further below a major support level, then okay, you can get through some bumps, even if it goes through the first support level, and have your take profit maybe up at the all-time high or something. But I think this move's a bit risky in terms of going against the current fundamental environment if you stick with it too long, right? So maybe a close stop loss and a close take profit makes sense here, if you're buying, that is. Okay, great. So thank you everybody for joining. Yes, this is a weekly webinar. We do Tuesday evenings typically at this time, and on Thursday it's earlier in the day, 11 a.m. London time. And so it's both technical analysis, fundamental analysis in those time slots that I do. And by the way, they're all recorded. So by tomorrow, you'll see this uploaded to our YouTube channel, and you can rewatch it. You can watch the webinars from last week, last month, etc. Okay. All right, everybody. Thank you for joining. Good luck with your trading. I think you'll see a lot of movement this evening still. And like I said, take a look at that Australian chart. I think you could set up some pending buy stops or sell stops and wait for breakthrough moves to trigger those, whichever direction the news sends it, as that news comes in tonight out of Australia. All right, everybody. Good luck. Bye for now.